I'm going to look at a few markets here. I'm going to start with the dollar. So I'm seeing a lot of people, they can't find any fundamental reason for why the dollar can go down. But one could make the same argument with Bitcoin. There was just no fundamental reason why Bitcoin, the bubble in Bitcoin would burst. It was going to $1 million, remember? This really doesn't have anything to do with fundamentals. It has to do with sentiment. And you can see in this long-term chart that the dollar just got stretched insanely far above the 200-week moving average. And all markets have regression events, and the further price gets stretched from the mean, usually the more extreme the regression event is. This move here is very similar to this one, with one big major difference. This move occurred very early in a new 3-year cycle, so the regression event unfolded more as a sideways consolidation, giving this 200-week moving average time to catch up to price than it did as a really sharp move back down. This one is not in that position. This is late in the 3-year cycle, so I doubt that this is going to unfold as a choppy move sideways over the next year and a half, allowing this moving average time to catch up to price. I think it's probably going to turn out to be a sharp move back down to and maybe even below this 200-week moving average. The timing band for the 3-year cycle low is out here in the spring or summer of 24, so we got about a year and a half for this to unfold. So this is what happens when you get these runaway moves. As the move progresses, more and more people become convinced that there's no risk, just like they were convinced there was no risk of Bitcoin ever going down. And so you're getting buyers. The smart money bought down here, and they've held their position. And then the move just keeps chugging higher. So you get more buyers in here. And then you get, as the move just continues to run away to the upside, you get more and more buyers. And then you get this kind of a parabolic move at the end there, where all of the retail money finally becomes convinced that there's no risk in going long this asset. It's never going to go back down. The fundamentals will prevent any corrective move. And so you get a lot of buyers during the last half of this move. And then at some point you run out of buyers, and the price starts to correct. And so now stops start to get hit. So anybody that bought up in here, their stop has gotten hit and they've gotten knocked out. And the more people get knocked out, the more the selling intensifies. And the more it intensifies, the more people late on the upside of this parabolic move, the more stops get hit. So the selling continues to intensify, and I think that's probably what's happening here. Is we're starting to take out stops all along this parabolic structure. The first real support zone is going to be right here on this breakout. That would be the spot where I would anticipate maybe a stronger bounce. One where the bulls will really try to come in and regain control of this market. I don't think they're going to be able to make a higher high. I think we're probably in the declining phase of this 3-year cycle. So while there could be a very convincing bounce off of this support zone, and then we got another one down here around 101, I doubt that it's going to be strong enough to push this up and make higher highs. I think this is probably 3-year cycle top. So anyway, that's the dollar. Now let's move over to the stock market. Right, I've shown this chart before that the Dow made a higher intermediate high, and that is a warning sign that maybe we're a little early on anticipating the recession and the move down into the next 4-year cycle low. The transports need to confirm though. So let me put up a chart of the of the transports here. And this is not exactly, this is an ETF. This is not exactly the chart of the transports, but it's pretty close. At this peak on the actual transports, we were about 2.5% from making a new closing high here. So the transports have to confirm this in order for me to say with a great deal of confidence that the bear market is over for now. It's not over. We're going to have a very destructive move down into the 4-year cycle low, but it may just be that it's going to get pushed out a little bit, and maybe stocks rally along with a decline in the dollar, get everybody on the wrong side of the boat, and then we had that very destructive move down into the 4-year cycle low, maybe in 2024. So anyway, this is the S&P. It's on the verge of breaking this cycle uptrend line, so it's a little early to say with any degree of confidence yet, but we may be starting down into the first daily cycle low. So that would be a minor corrective event. And then if the transports are going to confirm and make a higher high, I think they would do it during the second daily cycle. So let's just assume here that we're in a daily cycle low. We come down, we break this trend line, come down here somewhere, we get a little oversold on the RSI, and then that's where the buyers come in, and we start the advancing phase of our second daily cycle. And I have no idea where this would rally to, but this, after this first correction, this would be the opportunity for the transports to maybe confirm that higher high. And that doesn't mean that it has to be a sustained move. It could be, like the Dow over the past several days, just a marginal break above it. But if that happens, it's going to mean that things are just not going to be nearly as easy as the bears are anticipating. We may, we might do something that looks like. All right, now this is just a rough idea. These aren't targets or anything, but first daily cycle low, we get a second daily cycle that maybe rallies up, maybe the transports make a higher high, maybe the S&P makes a higher high, and then maybe we get a third daily cycle that rolls over, and we get an intermediate cycle decline that erases a big chunk of this. So just a very difficult market, but one that is clearly not ready to roll over and give us that move down into the 4-year cycle low just yet. For gold, I noted in one of my previous reports that I had mentioned this to subscribers when it happened, that we had what I called a 3B reversal. Kind of, sometimes you get a 2B reversal where you get a move below a pivot that reverses, and then that ends up being the exact bottom. Every once in a while you'll get one that occurs on the third test, and that's very often that's even more powerful, and that actually did turn out to be the intermediate cycle low. So we're in the advancing phase of a new intermediate cycle, and I warned that we were probably moving into an easy phase, and this may even turn out to be the 8-year cycle low, and we're moving into what I think is a trending phase in metals. And you got to change strategies. That doesn't mean there's not going to be corrections along the way, but it means that the price is generally moving from lower left to upper right, and this is the opportunity to make some good money if you can just hang on to this trend. But people have become conditioned to expect this and expect difficulty, and so they want to take profits quickly. They get They panic on any little correction. I said I was going to get my popcorn out and watch as multitudes of people screw up the easy phase of a trending move, and that is exactly what's happened here. I saw many people panic right here, lost their position. In GDX just the other day, we get we get this big move down, which is almost certainly manufactured by the cartel. People panic. The comments are, this just doesn't look good. Are you concerned? And they sell. And then, of course, the next day it all reverses, and today we're going to be higher still. And so, this is just what happens in bull markets. They kick the unsophisticated and emotional or over-leveraged traders. They knock them off with moves like this. And in the metals, these are calculated moves very often by the bullion banks to knock retail traders off and to try and suppress the metals. The Fed is trying to fight inflation, and the last thing they can have is for metals to be moving strongly and steadily higher. So there's going to be a lot of incentive for government and central banks to try and suppress the metals. So you're going to get a lot of this kind of stuff, and it's going to make it very hard to hold your positions. But as I've said before, the banking cartel, they are going to win a lot of battles, but they are not going to win the war. And if the 3-year cycle low is behind us, and I think the odds are starting to look pretty good that it is, then they are in the process of losing the war. They're going to lose the war during the advancing phase of this next 8-year cycle, and we will probably eventually get a bubble phase during this 8-year cycle where the gold easily goes above $5,000. I'm on record for saying that $100 silver is going to be a piece of cake. Again, that doesn't mean it's going straight to $100. It just means it is going there during this 8-year cycle. So, any silver bought at $21 right now is eventually going to be $100 at some point during this the first half of this 8-year cycle advance, and I think it's probably more realistic that silver during a bubble phase is going to be above $200. I've tried to get people in. I'm sure there are some people that are just, there's no way to help them. They're too leveraged, and they get knocked out on these dips. They certainly got knocked out on this dip. But for the people that will listen to me, not get too terribly leveraged, if you want to really get overexposed, you do it with physical silver. This cartel's not going to be able to knock you out in physical silver. But for trading positions, you can't be over leveraged or too heavy, because the cartel's they're going to do stuff like this, and it's going to be really hard for an inexperienced retail type trader to hang on through these kind of moves. We have oil, and admittedly, I got a bit lucky on this one. We bought right here as oil was making the undercut of this low. We wanted to buy into weakness. There was no guarantee that was going to be the bottom. It might have just kept going down, and we would have had to stop out quickly. But as it turns out, this was basically a 2B reversal here. So we bought right in here, and we're holding our position. We got follow through and a swing the next day, and we're getting some more follow through today. So we've got a nice cushion on this position. We've got a break even stop, and if the CRB is putting in a 3-year cycle low, then that was we may have gotten the 8-year cycle low in gold a couple of weeks ago, 3 weeks ago, and we may have got the 3-year cycle low in the CRB right here with oil. So we may have actually picked the exact bottom in both. All right, so we are long oil, and we've got a cushion and a break-even stop. We're long gold. Gold is still early in this daily cycle. I don't want to get knocked out by cartel interventions and manipulations this early in a cycle. And I noted to subs that maybe you wanted to go ahead and take profits on any SPY or any stock market ETFs right in here, just because it was getting late in the daily cycle, and we didn't really want to get caught in a daily cycle low. I wasn't really trying to pick a top, and I don't know if this is the top yet or not. It's still a little bit early. But we need to break this trend line first before I could say with any degree of confidence that we did get a daily cycle top. But we had made enough money, and we were just controlling greed, just making sure that we didn't get caught in a daily cycle decline. And if this does turn out to be the move down into the daily cycle low, then we'll keep an eye on it, and we'll try and pick the bottom here, and then we'll get long again for the second daily cycle. And like I said, if the transports are going to confirm and make a higher high, it's probably going to come during this second daily cycle rally. So right now we're just kind of sitting on the sidelines. Maybe a few people might have one or two puts on the stock market. Again, we bought some extra time on those just in case this isn't the top of the daily cycle, and we may have to weather another bounce, maybe all the way up to the 200-day moving average before this does start down in earnest. But we bought a little extra time if you're trying to play that downside, just in case that happens, and then you've got plenty of time to catch the real move down into the daily cycle low. And maybe this is starting the move down into the daily cycle low right now. Like I said, it's still a little bit too early to tell.